Hello, welcome to my channel, my dear friends. My name is Abhilash and I'm a trader next door. In this video, I'll be analyzing the chart of gold USD for Monday. So if you're watching my videos for the first time, you can subscribe to my channel for regular market analysis. So let's get started. My dear friends, this video will be pretty long and a bit complicated. So if you're busy right now, then please watch the video later. That's my request. And those who do not like long videos, I'm extremely sorry, but there are many things that I'll have to discuss. Okay. So first of all, um, let's look at the weekly chart of gold. So as we all know that gold is an uptrend, okay, gold is bullish, etc., etc. But if you look at the weekly chart of gold here, then we can see that this week market has formed a spinning top. And if you look at the previous week's candle, then also we can see that previous week also market formed a doji kind of a candle. So for the last 2 weeks, the most important thing that I notice is that market is in indecision mode. So for the last 2 weeks, there is no clarity about the direction of the market on the higher time frame. And most importantly, we can see that the 50 moving average, okay, the 50 moving average is causing some trouble for the buyers, and market is struggling around the 50 moving average, as well as we have a resistance on the weekly time frame. So overall, the market may seem bullish on the lower time frame, but on the weekly time frame, the picture is kinda confusing. Or in simple words, on the higher time frame, the bulls are struggling to take the market upside. So as a result, there is a possibility that we may see some correction. And stochastic RSI is also indicating that market is extremely overbought. So if market goes for correction also, do not be surprised. Now, let's have a look at the lower time frame, my favorite time frame, the 4 hours time frame. And you can see that the chart is kind of messed up. Usually I try to keep my charts clean, but today, okay, there are many things to discuss, so I'll explain one by one. First of all, gold closed at 1791. This is the last traded price of gold. So if you're holding any buy position in the market right now, then be on the trade, no need to exit. As long as gold is trading above 1775, as long as gold is trading above 1775 level, you can be on the buy side. Okay, you can be on the buy side because overall the structure of the market is still bullish. There is no doubt. Okay, the higher time frame, the weekly time frame may be telling a different story, but the structure of the market is bullish, that we cannot deny. So on Monday after the market opening, observe the volatility of the market first, because usually during the first half, Asian session and European session, we usually do not see much volatility, and the Christmas is ahead. So as a result, the chances are very less the market will show some crazy moves. So as per our expectation, if market shows low volatility, then you can expect some selling pressure. Okay, you can expect some quick sell around 1799 to 1800 level, and then you can expect some quick sell around 1805 level. So these two are minor resistances for the market as well. Okay, why minor? Because overall the structure is, nobody can predict the reaction of the market, so we can only trade according to our levels, according to our understanding. So what we can see here is that around 1799 and 1800 level, we have a minor resistance. So there's a good possibility that market may show some reversal if the volatility of the market is low on Monday. If market reverses, you can go for a sell position and you can expect a profit of 40 pips. In case market shows good amount of volatility and market breaks also, we can expect again selling pressure around 1805 again. And one more thing that I would like to add here, the reason behind considering these two reasons is that if you look at the chart carefully, then you can see that we have a head and shoulder pattern formation going on. So if market reverses from this particular zone here, then there will be a head and shoulder pattern formation. Personally, I do not prefer to trade on patterns much, but yes, we can clearly see that the pattern formation is going on, so we cannot deny. So if the pattern formation is correct, okay, if the pattern formation is correct, then obviously we will see some downside in the coming days. And we have also seen that market is struggling on the weekly time frame as well. So the pattern formation on the 4 hours time frame is not a coincidence. And one more thing, the reason behind, considering these levels are, if we draw the Fibonacci here, you can see market beautifully respected the Fibonacci 23.6% previously. This time market has respected, market closed at the Fibonacci 38.2% retracement level. So don't you think market is beautifully, superbly respecting the Fibonacci levels? So as a result, we have again Fibonacci around 1799 level. We have Fibonacci 61.8 around 1805 level. So obviously, if not complete trend reversal, at least market should show some little bit of selling pressure, and if market reverses, we can definitely take a sell position. If not the formation of the head and shoulder pattern, at least we can make some quick profit of 30-40 pips. And the big resistance zone is around 1807 to 1813 level, this level. Okay, obviously we can expect some selling pressure again. And if you're a swing trader and if you're looking for a good positional trade, then you should wait for the market to break this level here. You should wait for the market to break 1825 level. This is not just a normal price rejection from above. This is also the resistance from the weekly chart, the pivot level. So if you're looking for a good buy position for a couple of days, then 1825 will be the level, because above this level, if market crosses 1825 level, then only you can expect the market to be bullish again. But right now, though the market structure is bullish, but still I think that there will be some struggle for the market in the coming days. So as a result, we can expect some quick sell around 1799, 1800, and if market breaks it, then 1805. If market reverses, market shows price rejection from above, we can go for a quick sell for 40 pips. And the ultimate resistance is around 1807 to 1813 level. Swing traders, positional traders, your buy level will come only above 1825 level. Okay, and as we can see, the weekly chart is struggling. Okay, weekly chart is showing indecision mode, battle of buyers and sellers. So as a result, though we have an upside on the hourly time frame, but still we cannot be too confident that market will remain bullish, because we also have a head and shoulder pattern formation going on as well. Okay, so this is what we need to do if market goes up after the market opening. So, and in case market starts falling, okay, after the market opening, if you see market coming down, okay, if market starts coming down after the market opening, your good support level, okay, good support will be around 1766 to 1763. So again, the volatility play a big role. Observe the volatility of the market. If you see the size of the candles like this, you can expect the market to take support around 1766 to 1763. If you see market trying to take support, market bouncing, market showing a hammer pattern, good price rejection from below, we can go for the buy positions around 1766 to around 1763. Okay, but if you see market forming candles like this, if market starts falling with this type of candles, means market has volume. Okay, so whenever you'll see a good amount of volume, sellers, okay, then obviously this level will not be able to hold the market. In that case, your next big support will be 1745 to 1750. The reason behind considering 1745.50 is previous price rejection, as well as we have Fibonacci 38.2% retracement level, and as we all know, Fibonacci 50 is the strongest. So as a result, we are considering 1726, 1720, 1720 as the ultimate support on the chart of gold. Not only Fibonacci 50% retracement level, but we also have good price rejection in the past. Okay, so 1745, 1750 is the big support. 1726, 1720 is also a very big support on the chart of gold. But on Monday, if market remains slow, then we can also expect the market to bounce from 1766 to 1763 if market starts coming down. Okay, we, as you can see, that we also have the trend line as support. Yes, I'm not talking about the trend line, but to be honest, buying a trend line can be a little bit risky. So if you are an experienced trader, okay, then you can go for a buy position around 1781, 1782 level. Okay, let's make it 18, 1780 to 82, because of the trend line as well as the previous price rejection from below. But keep in mind, this is a weak support. That's why I'm mentioning about this support in the last. Okay, so if market comes to this 1780, 82 level, okay, observe the market, because in case of a big selling pressure, this level will not be able to hold the market. So the volatility play a big role in the market. So observe the volatility of the market after the market opening, and then only take the decision. After all, you must understand that not all levels have the equal amount of strength in the market. So this is it. Hopefully if understood. I'm extremely sorry for making a video so long. Okay, so there are many things I had to explain. So please follow proper risk management. This is my analysis. I can be wrong as well. So do not gamble with your hard-earned money. Bye bye. Take care.